Hello traders and welcome to another video review. Today is Wednesday, the 9th of December 2020. We are going to take a look at the Forex calendar to see what is going on today on the Forex market, and then we'll do some technical analysis. So let me just slide down towards today's date and let's see what we have today in the calendar. Some data has been released already, like the data from the New Zealand and the data from the Japan. As you can see, the low impact core machinery orders data had been way better than expected, 17.1% versus the forecast of 2.6%, and the previous reading was minus 4.4%. So this is astonishing data, and the same situation is with the money supply. 9.1% on a yearly basis versus 8.9 forecast. So it's better than even the month of the November. So some kind of a good data from Japan. We got the consumer price index from China. Data had been published at 2:30 in the morning. As you can see, the consumer price index is minus 0.5%, which is way below the 0% forecast, and way below as well the previous reading from November, 0.5%. So this is kind of a disappointment. Producer price index, as you can see, is a little bit lower than expected, minus 1.5% versus 1.8%, but it's still better than the last month 2.1% reading. We got some data from Germany released already. The trade balance is shrinking in Germany, so it's not that good for the overall economy in Germany, and as we know, in the Eurozone as well. But the key event for today is the overnight rate and rate statement from the Bank of Canada. The market expects the rate to be left without any change on 0.25%, just like the month before. But there might be some kind of interesting remarks in the rate statement, so it's good to keep an eye on this statement. The overnight rate is scheduled for 4 o'clock. Another thing is with the crude oil inventories, because it's the one worth of mentioning event during the New York session, 4:30, the crude oil inventories for all of you who are trading the crude oil. So let's just take a look. I think we should take a look on the Australian dollar. The reason for that is, of course, the Chinese data. We will take a look at the Canadian dollar, and then we take a look at the crude oil. So let's just go straight on to the Australian dollar. What is going on here? This is daily time frame chart, as you can see, and we are still going higher. The last breakout above 7,415 pips had been confirmed. Today we are trading around the level of 7,448. The recent high was made at 7,456, so it's like not even 8 pips from the recent top. The target for the bulls is 7,483 or 7,500 pips. This is the next target for the bulls on Australian dollar. The intraday technical support is seen at the lows from the 7th of December at 7,375. As you can see, the momentum is increasing as well. Right now it's pointing north, so it's very good, and I think there is still a room for the upside on the chart for the price and on the momentum. As you can see, we almost hit the level of 70 points, so there is still a room to go a little bit higher on the Australian dollar. So the outlook is apparently bullish on the Australian dollar. Let's take a look at the Canadian dollar. Canadian dollar is going low because the trend is down. So right now the people are selling the American dollar and buying the Canadian dollar, so the rate is going lower. We are trading around the level of 1.2782, but this is not the last not the last technical level that I would like to point out, because this level is kind of important because it's so low and there is almost no new support for the price lower, except some kind of intraday supports. But the other important level is of course 1.2928, which is a technical resistance right now. Yeah, so the levels of the momentum are now very low as well. The RSI is below the level of 30, so the market conditions are overbought or even extremely overbought at the daily time frame chart. So please bear this in mind, that we might have some sort of the bounce soon, of course. The intraday technical resistance is seen at the level of 1.2832, so it's about here, and if this level is violated, there is a chance for the market to go 100 pips higher towards the key technical resistance in the short term, of course, which is at 1.2928. In the case of a further movement lower, as you can see, I will switch now to the weekly time frame chart. The trend is definitely down, and it's very unusual situation, because the next support is at 2018. It's from 2018, and it's around about the level of 1.2527. So if we are trading that low and there is no bounce, it might be, but if there isn't any, then we will travel even lower, more than 250 pips. So it's kind of very important for the bulls to keep an eye on this level and try to bounce here. If not, we are going lower, 250 pips, maybe not this week, but definitely this is kind of a long-term downtrend that has, of course, started in the middle of the March 2020. So please keep an eye on the USD versus the Canadian dollar. And the last one, crude oil. Let's just take a look at the crude oil chart. Okay, we will start from the weekly. As you can see here, the recent 1, 2, 3, 4, 5 weeks has been very nice for the bulls, because it was an uptrend. We broke above the level of 43.85, which was the technical resistance. Now it's support. We have tested this support last week, and let's see what is going on the daily time frame chart. As you can see, I got my two levels on the marked on the chart with a red horizontal line, 49, 29, 50, 64. Those are the target levels for the current uptrend. But as you can see, the market can barely trend above 46.29. It's being pushed lower. As you can see, we got this upper shadows, which are kind of a long. So the bearish side of the market is pushing the price if it goes above 46.28. The high was here about the level of 46.70, 46.67. So right now we are not really trading very well for the bulls, right? We got this a little bit of a confusion here. We went a little bit lower towards 45.55, and right now we are just testing this short-term trend line. So if we will get back below this orange trend line, that means that this might be some sort of the top, and the rally towards 49.29 will not be that easy, right? Furthermore, if we will break below 43.85, then the 49.29 target is out of the table. So please keep an eye on the current developments. As you can see, we got this nice momentum behind the move up. We are trading rather high on 63 points, so this is very close to the level of the 70, which is the level of market of about conditions, but there is still some room for another push higher towards, let's say, level 49 29. So that's the outlook for the crude oil. The levels are very important to watch here, and we will see how the market will react when it will get there. So that's everything from me for today. Thank you very much for watching, and I hope I see you guys tomorrow. Bye bye.